Time now for a look at some of the day's business news with French 24's Cole Stangler. Morning to you, Cole.
Hey, Will.
We're getting some new growth figures out of China's economy. It appears to be a return to form.
Yeah, this coming, of course, as legislators are gathering for that annual meeting. Addressing delegates, Premier Li Keqiang said China would aim for GDP growth of over 6% this year. A fairly conservative target, according to most analysts, but one that would still mark around a 4% uptick from last year's growth rate. As it stands, China was the only major economy in the world to expand in 2020. Ken Milnedelik takes a closer look at the government's ambitions for 2021 and beyond.
This is the National People's Congress that set the agenda for a post-COVID China. Its annual growth target was modest at above 6%, which is on a par with recent years. Analysts had expected authorities to aim for 8%, as the world's largest economy makes up for lost time. But Beijing said that the pandemic would continue to hamper its economy, and businesses are still struggling, putting jobs at risk.
今年发展主要预期目标是国内生产总值增长6%以上，城镇新增就业1100万人以上，城镇调查失业率5.5%左右。
As well as the 6% growth target, Beijing wants to create over 11 million new urban jobs and boost investment into research and development by 7%, as China tries to shift away from high-volume, low-value industries to higher-value sectors, such as biotech and renewables. Under its dual circulation strategy, the government will prioritise the domestic market, with the international markets playing a crucial but supporting role. The Premier also promised to slash carbon emissions per unit of economic output by 18% over the next 5 years. China's goal is to have a deficit of 3.2% in 2021 as the government continues to shore up the economy.
Let's take a look now at some of the day's trading action with the major European indexes in largely negative territory to close out the week. Investors responding to comments from the chair of the Federal Reserve yesterday. He said he expected inflation to pick up temporarily in the coming months. You can see there the FTSE and the CAC 40 both down around 0.6% at the open. Dassault shares in France down more than 0.3%. It's after the firm announced a drop in annual earnings for 2020. Major Asian indexes, meanwhile, also showing some slight losses. The Nikkei down around 0.5%. Losses across the board in Shanghai, Seoul, and in Hong Kong. Meanwhile, oil prices are on the rise. Brent crude trading at over $67 a barrel. That's after OPEC and other oil-producing allies met online Thursday. They agreed to leave most of their existing production cuts in place.
Next up, Tesla is getting involved in a major nickel mine.
Yeah, this is in the French overseas territory of New Caledonia, the world's fourth largest producer of nickel. Interest has grown in the metal needed for the lithium-ion batteries that power electric cars. So do have concerns over a worldwide shortage with prices on the rise. Local authorities recently signed off on a politically sensitive sale of the mine. Under the deal brokered with Tesla, the American auto firm will have access to supply and will serve as a technical advisor to the project.
Moving on to Latin America, Colombia, where shopkeepers in the capital Bogota took to the streets in protest.
They showed their opposition to restrictions on non-essential businesses. The neighborhood of San Victorino usually hosts weekly sales events that start very early in the morning, something that's no longer possible under new citywide rules that restrict opening hours. Business owners say that nearly 200,000 people depend on the sales events.
Estamos de luto porque nos están matando, nos están acabando, nos están cerrando todas las posibilidades a todos los microempresarios, famiempresas del Madrugón.
And finally, poverty is on the rise across Latin America. That's according to a report from a UN economic agency covering the region. It found more than 20 million people were pushed into poverty last year, a situation that now affects around a third of the region's population, with women in particular feeling the effects. To combat the trend, the agency has called for more public spending on welfare.
COVID-19 has also aggravated the unfair sexual division of labor and the social division of informal caregiving. The truth is that women have been the most affected in this pandemic, and we have a decade-long setback in the labor inclusion of women. We reiterate how urgent it is, today more than ever, to move towards a welfare state with universal, comprehensive and sustainable social protection systems, which requires a new social contract.